And big earnings from Lupin Pharma this quarter. The Indian drug maker posted a 73% jump in net profit to nearly 15 billion rupees, driven by strong demand for its respiratory drugs and complex generics. Revenue also climbed 24% to over 70 billion rupees, with US sales surging 47% and now making up 40% of global revenue. That's a standout performance compared with peers like Cipla and Dr. Reddy's, who saw more subdued US sales. New product launches played a significant role in boosting sales both in the US and in the domestic market. All right, well, joining us now is Ramesh Swaminathan. He's the Executive Director and Global CFO at Lupin. Thanks so much for joining us, sir. I want to obviously first start by congratulating you on that strong Q2, the highest ever quarterly profit. And yet, surprisingly, you've indicated that this momentum may not continue. Why is that?
Firstly, thank you for having us on. This quarter's performance obviously has been a continuation of the good performance over the last several quarters, so to speak. But this speaking in particular is because of, in fact, the ramping up of tolvaptan, which we launched last quarter. We did pretty well on that score. And as you would know, with almost any generic drug, there is, a big upside on launch, and then thereafter is a continuous downside. Especially in the case of first-to-file drugs, there is a period of exclusivity. So there is this period of exclusivity ending in, possibly the next quarter, and that is the reason why I said that there could be a tapering down of the performance over, the second half, so to speak. But having said that, there is still strong momentum happening across several products of ours. There's, in fact, other secular growth prospects in other markets as well. So whilst it would be, in terms of comparisons to the first half, a little tepid, it would still be pretty good.
All right. Your EBITDA was up this quarter also. However, the stock market has not responded to these numbers positively, at least. Lupin stock has underperformed the broader market and the pharma index. What are you telling investors about that?
So insofar as our guidance for, our EBITDA margins are concerned, I did speak, and we just spoke about the fact that it would be a tad lower. And for the full year, you'd end up close to about 26%. The next year, obviously, it is really going to be dependent on the fortunes of several products that we launched in recent times. There are, of course, newer products that you would be launching. So in that sense, I think the momentum would certainly continue, not to speak of launches like Semaglutide in India itself. Next year, we're guiding for EBITDA margin of anywhere between 24 to 25%. That would come on the back of, in fact, the products that will still continue to do well, apart from, of course, this incessant focus on cost.
All right. Interesting that you mentioned Semaglutide, and I can pivot to that very quickly, because that weight loss boom that we're seeing really across the world, your own Semaglutide plans for India and South Africa. We understand that you have Canada, Brazil, and China on the horizon too, but relative to the rest of the world, where does India stand, and how big in numbers is the opportunity, according to you, when it comes to Semaglutide?
From our perspective, Semaglutide is indeed a very big opportunity. India is generally regarded as, in fact, the diabetes capital of the world. And there are a number of people who would, of course, consume this for diabetes and also for weight loss. We believe that the opportunity would be close to $1 billion across India. And given the fact that we are actually amongst the top players in the diabetes space, the cardiovascular space, we will get a fair share of, of the entire market, so to speak. And that would obviously mean good volumes and profits for us. So we're pretty bullish about our prospects for Semaglutide in a general sense.
All right. Very interesting. All right. I want to get a larger zoomed out view from you about India's pharma industry, where it heads, and then I'll talk about the US. India's pharma industry, just for our viewers, is the 5th largest contributor to India's manufacturing gross value added, but it is still only spending about 6 to 8% on R&D. Your team, in the earnings call that I heard, you said effectively that you're burning money on R&D on biosimilars, but that you should be positive in the next couple of years. What does Lupin need to do, and by when does it need to do that? And what does India really need to do when it comes to R&D to, move that pharma journey positively?
The discussion about R&D, I think, is a pretty, a lengthy discussion, so to speak. Insofar as Lupin is concerned, obviously, we spend a fair degree of our overall percentage of sales on R&D. We have pivoted to more complex stuff, apart from, in fact, the OSD. And essentially, we are now led by more respiratory, biosimilars, complex injectables, and the like. And of course, we would also be ramping up on the specialty front as well. Speaking about about the overall prospects for R&D in India, India is, of course, as companies become bigger with deeper pockets, we would, of course, be looking at, in fact, spending a lot more on R&D. And clearly, that's one of the items that it's on the agenda of the government as well. It has come out with, in fact, incentives for incentivizing a lot of companies in the sector to kind of ramp up on the R&D front. There is, of course, the possibility of ramping up in terms of collaborations with, in fact, academic institutions. So a lot of things on the anvil. So I think it's a question of time before, companies of our ilk also start having a lot of creative drugs coming in from India. So clearly, we are very bullish about the prospects, and we're optimistic about our chances. And there's, of course, tailwinds coming in from artificial intelligence and the like. So clearly, we're pretty bullish about the future.
Yeah, tailwinds are not just coming from artificial intelligence, and I'll ask you about that in just a bit, but also from the latest news that you're seeing flashing on your screens. The Senate has advanced the shutdown bill, and that means that we are likely to get the end of that shutdown. That is what has just happened. We were inching closer to that, Democrats and Republicans agreeing to a deal, and now we just have to wait for the House to go ahead and effectively pass that same bill. It needs to still go to the House. That could take 1 or 2 days, maybe more. We're not quite sure. But that's what we'll be watching. And you're seeing how U.S. futures are reacting to that. Live. Implied open of S&P 500, Dow Jones and NASDAQ out there in the green. NASDAQ particularly up plus 1.18%. We're going to continue to track that as and when we get details. That development has been expected for the last couple of hours. It's finally come through. But I want to return to you, Ramesh, because there is pressure from the likes of the White House, Mr. Donald Trump indicating several different things when it comes to pharma. He is wanting everyone to localize in the U.S. What would it mean for you, Lupin, and its cost structure and margin profile, especially considering the U.S. has stricter FDA regulations versus India and requires more R&D that we were talking about earlier?
So, this clearly has been talked about for quite some time now, but we do believe that when it comes to generic medicine, it is actually a question of access to medicines by the general American population. So given the fact that, in the event that there is tariffs and the like, there is going to be an increase in overall cost to the public, I'm not sure that he would ever come out with tariffs for this sector. So clearly, that's the way it is at this stage. But it's, again, early days. We need to look at a wait and watch policies to be adopted in this case. But we are pretty bullish about our overall prospects in America, because we also have, in fact, a couple of manufacturing plants out there, one at Somerset, and we are expanding our facility at Florida, spending a lot more on R&D and, of course, the manufacturing facility itself. So clearly, whilst, we have this basic paradigm of manufacturing and doing R&D in India, is, of course, supplemented by large efforts in America as well.
All right. So there was a lot that we wanted to speak to you about, but unfortunately, we've completely run out of time. We appreciate you coming on to CNBC once again at the occasion of your quarterly results. Thanks so much. All right. That was Ramesh Swaminathan from Lupin. That's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is up next.